And sure, no problem. And I jumped in to a partner, two partners and I, we thought, let's invest in some projects together. Let's work it out. And it worked out. And 10 years later, here we are as a fund. And now we're dissolving that fund and launching a separate one, actually with two other partners that's going to be strictly in media content space, because I see a huge opportunity for at least the next 5 to 8 years in this space. So that's my kind of story. And then we'll weave in other pockets of it as we keep going.
Yeah, so you touched on your partner. So can you talk a little bit about the company that the three of you founded?
So it ended up being, so it was the KMH group, that's the umbrella company. And it just initials is all it is really. So we jumped into that and we started investing. First, it was just kind of consulting on some media projects. So one is strictly from the music industry, one is strictly from the finance industry, and I was kind of the media finance hybrid. So, and then it worked out and it's been great. It's been awesome. But now I think all three of us want to kind of do separate things. I will still have them come on to some of the things I'm going to do in the next fund, but they don't want to get involved with content, which is where I want to be for the next 5 to 8 years. But so with that current fund, we've really done quite a bit. We didn't do anything we didn't get involved with the Airbnbs or the Ubers of the world, because you get into this world to kind of go after that and make your 200x and get out. But we did get behind some less glamorous, though very fruitful developer group. We found a developer group that could serve some needs of all the companies coming to us. We invested them and blew them from, I think, 5 to 100 employees, and now we serve globally. It's not what you typically get into VC for, but it's a great, it's allowed many other kind of hits out of the, hits that we take swings and misses in future endeavors.
Yeah, for sure. So let's backtrack a little. How exactly did you choose to invest in media? Kind of what were the opportunities you saw that outweighed some other industries?
It's where I had expertise, first and foremost. So, and it was where I had a lot of desire to be. And I knew kind of the ins and outs. So my whole thing, as I mentioned, I wanted to go back to learn how to do marketing in that space, knowing that there was a need for it. And there weren't that many MBAs in the music industry at the time. And we quickly pivoted away from music and media because we saw other stronger ROIs and tech plays within that space. So then we broadened it into tech plays within sports and media. That's our thesis, kind of how we shaped it in. So that was the expertise of all the three of us in the room. And so the one who came from finance, he wanted exposure to the media, meaning he wanted to invest in this space. And then the other two, we parked X, he parked, I think at the time, 5 or 6X or something like that. And then we've grown from that, significantly. So that was our expertise. And that's what I would like, if anyone wants to get involved in this space, kind of go for what you know and where you can find solutions for problems.
Yeah, so I want to talk about your focus industry. So we talked a little bit before this about how traditionally you've been focused on, sports, media, and entertainment. And a line that I stole from your LinkedIn was profit with purpose.
Sure.
So how do you find profit with purpose in those traditionally very competitive industries?
Sure, thank you. Yeah, so thank you for bringing that up. And that's just a tagline that is kind of forced by me. I'm the kind of knucklehead on the team that always wants to put that in play. So I always want to park 5 to 8%, 5 to 7% of anything that we do towards, there's two issues, global sustainability and gender equity issues. Because I was educated on some things that are happening here in America and globally that I had no idea about, just being a guy who grew up with all male cousins and brothers and didn't know that some things that were happening. So then I led me into working with the UN Women on something, and Nexus, this other social philanthropy group I belong to. So I knew that, hey, this is, especially in that gender equity space, it's a male-female issue. It's not just a female issue. So if you want to move the needle, males have to help with females too. So I kind of pushed that. Our team we're three males. On the next group, we'll have 2 males and hopefully another female will join. She's teetering on it. So we can focus on it. Now I'll tell you from my my biggest fail has been my biggest success story. So a few years, I won't even give the names, but you'll know what I'm talking about. A couple of years ago, a certain someone went down. It was 2016, actually. Certain someone, 2017, somebody, a big film media mogul, went down. So his assets were up for sale. So myself and two other investors, independent of my venture group, we put together, and this was the largest deal I'd ever worked on. And we put together almost $500 million from 14 to 15 investors. But the whole caveat was, and it was an easy deal to get done. That was easier to get a $550 million deal done than a $1 million deal, just because of the assets in play. Now, the way I wanted everyone to come on, because they were excited to be part of it, I said, we have to park 15% towards gender equity issues, because this is what this gentleman has done and what was kind of steeping in this industry at that time. And they were all on board with it, just because of how we are getting these assets. And we had, so it's always going to be a part of what I want to do, especially with the second fund that I'm doing. It's not going to be anywhere near 500, it's going to be around 50. And so we're going to park another 7-8%, and then working with people who are conscious of those efforts. And we don't want to work with people who kind of have cloudy judgment in some areas. Thank you for asking that, though.
Absolutely. So from what I'm hearing, it seems very clear in what you want your path to look like. So in that path, what are some of the challenges you may have faced, because now you're sitting in such a role of leadership?
So I'll just to tell you where I'm going with this, where we're going with the next one, and then maybe that will kind of open it up. And everyone, I speak fast. I mentioned this earlier. If I need to slow down, just drop a note, and then Michaila will just tell me to bring it down a bit. All right. So just putting that out there. Sorry about that. So where I want to be, I think I see the next 5, especially the next 5 years. So content is always going to be a plausible play. I think the next 5 years you have, Todd's here. All right, Todd, how you doing? I see. No, Todd he's involved with it. We'll talk about his company in a moment as well. We may get involved with them. So what we want to be doing is the next 5 years, they're streaming, Apple, Netflix, Amazon, we know all of them, and they're pouring a tremendous amount of capital to obtain and to own content, and then license it and put it through their platform so they can get the subscriber base and maybe put it into bundle and rundle packages. So I want to be part of that space. I think we have a good 5-6 year clip before it becomes too saturated. And then we can't even absorb all the content that's out there right now. Just imagine 5-6 years from now, after 3-4 companies I just mentioned spend another 10, 20, 30 billion in this space. So that's where I want to be with the next fund. So I can answer questions around that. That's going to be my expertise area of where I'm looking to be. And then you have phenomenal companies that are kind of pulling me in different directions, that are offering exciting plays that kind of tag into that space as well. So I know anything, and I try to know as much as I can about this space. Esports, I know we'll talk about later today. I missed an opportunity 6-7 years ago because we didn't want to, in our group, invest in that space in Europe. Now it's going to be here. We're the emerging play in America compared to the world. We're the babies in this space. So everyone's pouring capital this way. So looking at that space as well. I don't know if I answered any question, or at least one question that you had in your mind. I don't know where we went with that, but let me know. Wheel me back in.
Yeah. So I guess I just wanted to focus a little bit more on, you've gotten to the point where you're the founder of your company, or one of the founding partners. Yeah. So what were some of the challenges you faced along the way in founding a company that aligns with your goals and your visions? And
so raising capital from the right people is always difficult. And then depending on what, and having them wanting to have sway, and that once everything's signed, we get past that stage, then it's our ship that we run it for them, because they're entrusting us to do that. So we want to make sure we deliver. So in the VC model, is everyone familiar with how the VC model works? Should I just kind of explain that? So then it might be, is that good? Okay, I'm seeing some nods here. Okay, let's say a $50 million fund, right? Off the bat, so you look at a 10-year horizon where we have to return X amount after 10 years. Let's take that simple model. So if it's a $50 million fund, off the bat, 2% goes towards management fees, and that's rent, legal, licensing, all these things. So that's 10 million gone, right? So now we're down to 40 million. Okay, so 40 million. So of that, we'll split that in half. So 20 and 20. 20 is 20 million we're going to park to use at a later time, and I'll get back to that in a moment. The first 20 million is, so of the $50 million fund that you're hearing about, initially the day one, for the first 3-4 years, we have $20 million to deploy right now. And then once you start doing that, so let's break that 20 million down. So then we're going to go and start placing bets into things that align with our thesis. So for us, it's going to be media content plays, things that we can license to streaming services, or technology that can help us distribute or do other things in that space. So we're going to place bets. Now I'm just going to be very frank with you. 1/3 of those bets, we're going to lose money on. Typical model. 1/3 will break even, and the other third will be strong returns. Hopefully, that's what you hope for. So then we go with those strong returns. The other 2/3, we kind of go to the wayside. Then that other 20 million, after about 4 or 5 years, we start to realize that, okay, this 1/3 is our bucket of winners. We start putting that 20 million into these companies then, and doubling down, and then trying to grow them so that the exit strategy is IPO, secondary markets, whatever it is, acquisitions, whatever it is. So does that kind of make sense? Does that help everyone? How a $50 million fund works? Okay. Now your real question, what was it again? So I can delve that, because I think that's helps. That's why you hear a lot of no's from a lot of VC people, because we have to get like 20x, 30x return is what we're looking for in order to keep it happy. So 20x return would be of that 20, on that, of that money that we actually are making money on, is, gets you in the 130, 140 million range, hopefully. Right. So that means about 2.5 to 3x return on the initial 50 million fund, if that makes sense. So that's what we're looking to do. So that's why when people come to VCs, 99% of our day is saying no to somebody, because it doesn't align, and B, oftentimes the company isn't venture backable, meaning if you can only get 5x return, maybe we're not the right partner for you. If you get 10, 20, 30x return, or the possibility towards it, I think we can offer some value to you.
Yeah, that's definitely a challenge. So you mentioned that you go after kind of the best bet. So how do you evaluate? What are some of the factors you use to evaluate what will be the best bet?
And this is, yeah, sure, great question. So we look at beyond the idea. First of all, most of these ideas will only talk to folks that align with where we can provide value, our relationships and our expertise. And then the capital, that's how we can provide smart money, meaning money that comes with just not a check, but we can help you along the line and scale. So we look at the founders and the founding team beyond the idea. That's where we kind of draw our line, because A, is that team solid? B, have they experienced the problems they're trying to solve? Have they created solutions to those problems personally? And how do they think critically and emotionally around that solution to that problem? Because often the idea pivots when you get folks like us who are then supposed to be kind of experts in that arena. We often have different ideas as to how they can mature, get to growth, proper scaling, and revenue generation. So we look at the team first, and often that's where we place bets. Idea has still been great, but maybe the right team, what we thought the team, it's often the team that wasn't the right team for that solution, although we had thought they were. So that's sometimes where we kind of make a wrong judgment. Otherwise, the ideas that we get involved with are going to be ideas that we think we can bring value to, and that will be valuable in the marketplace. So we also want to see, not only can you see the venture backable portion I mentioned earlier, but is this solution in the market? What's the total addressable market? Can you make 10 mil from it, or 100 mil, or 3 billion eventually? How big, how large is that? How large is it, and what are the protective moats around it? If you launch, how can you protect? How are there barriers to entry? There's, that's the world that we're living in. Technology has lowered the barriers to entry to a lot of folks, so it's more competitive to kind of succeed now in many arenas. That's kind of how we make our judgment call.
Absolutely, that definitely makes sense. So I kind of want to combine a few aspects there. So you're talking about the competitiveness of it all. So how has that changed in the pandemic world, specifically with traditional sports being completely upset right now, and kind of the scale of which it's happening fairly uncertain for the foreseeable future? So how do you see companies kind of positioning themselves to tap into new opportunities, or are they kind of backtracking and pulling back? What do you see going on there?
So great question. So the best way to answer these things is we're in a recession right now, and we probably will be for quite some time. Stock market is independent of the economy, right? It's one small sliver of the entire economy. So in a recession, this is what happens generally, and then I'll tell you what's actually kind of happening, all right? Because of some other influences in the market. Generally, what happens, we end up writing smaller checks sizes. The check sizes are smaller because we have to be, and then we also have to be highly selective as far as, hey, if money might run dry, or there's a huge potential of this company not succeeding, we don't want to tie up too much capital, or we can't then find another partner that we can be blessed with to help or be partnered with. Now, and the reason we do, and it's the one good thing is startups that start to, in a recession, competition then kind of wanes out though. It's kind of there's irony in that. It wanes out because some of your competitors, if you're a startup or a company, may not have been able to meet requirements to stay afloat. Whether that's, your customers may have fallen off, your tech may have gotten more expensive, whatever, you may have had some things. So if you're the one company or two companies that are still of 5 who are still standing, that's where you want to be. Right, so we'll look at, so it actually becomes, if you're the company that can exist during a recession and still kind of thrive relative to where you were before, pre-pandemic, let's say pre-recession, you're going to have less competition. So then partnering with that company generally can be amazing. So what came out of the last, financial crisis? Uber, Airbnb, all these companies came out of there. And, Disney was launched in a recession, whatever, decades ago, right? So there's phenomenal companies that come out of a recession. I think Khan Academy, which is very relevant right now with online education, was born in 2009, 2008, something like that. So phenomenal companies, if they have the right team in place and they have the right partners, smart money that they've combined with, and they can succeed in a recession, they can be gold mines for everyone and provide tremendous value for the market.
Awesome. So thank you so much for that question, Atul. It's Avneet. How are you doing?
Oh, hey, how you doing?
Awesome. So what I wanted to ask to piggyback off of that question, esports seems like a really, really interesting industry, but most of all, it's an industry that I think a lot of people will be paying more attention to, the esports space, the media space. In fact, I think that's going to be one of our only sources of entertainment until this is over, the pandemic, right? So I do want to ask, DraftKings, it's a very interesting brand. It's a popular fantasy sports and betting website. And for those that might not be familiar, they actually just released their mobile sports book in Tennessee. It seems like they're doing kind of a beta test run in the state because they have a lot of local pro and powerhouse college teams, and it's going to allow for online betting within that area. So how have companies like DraftKings changed the sports industry, and what's in the future? What does it hold? What are we looking forward to?
So this is an exciting space, right? So esports is esports, which means, and then DraftKings is an online gambling kind of play on esports and other and actually live sports as well. So DraftKings is going to be, I'm not giving stock advice, but I think it's going to be a phenomenal company moving forward. So there are really two main players. So it's FanDuel is the other player, and now they were acquired by Flutter, which is a huge European group doing what DraftKings and FanDuel are doing here now. So the opportunity, if you look globally, the global perspective is US is going to be the hottest market for the next 10 years. Because it's the most immature, most in the nascent stages, it's early. UK, Asia, they're all kind of mature markets, and they're now facing headwinds, meaning regulation is coming into play now. So UK is the most developed market by far. And then Germany, Australia, Asian, Latin America, to a certain extent, there's some gray areas there, but it's a robust market. But US is where it's going to be because A, it's new. B, there's a nice amount of, there's a huge value, but like we said, total addressable market earlier, TAM, it's going to be, it's significant here because A, there's, even the middle class here can afford quite a bit more than maybe middle classes in other regions, A, B, and it's just, everyone's playing it at different levels, different age groups and all that. So it's an exciting market. Now, the reason I think, so the, like, let's say DraftKings, let's take that for an example. I think they're going to be phenomenal. They've partnered with who I think is the GOAT, Michael Jordan. They, you know, he's an advisor now. They've partnered beyond the Tennessee thing that you said. They have partnerships with ESPN, quite a few different companies now, and they're going to be the content play as well as the online gambling source. So the way these things are happening is the quickest way to do it, and why I think it's going to be huge in the US is we you know, I think it was 2018-ish, they opened up the laws that allowing it to happen. B, you do have to go through land-based casinos right now to open up in a state. So what are they doing? They're going to like Vegas, wherever there are land-based casinos, they already have the licensing to operate in that world, in that region. So the FanDuels and the DraftKings of the world and all the other smaller players have to partner with them to enter those markets. So that's what's happening. And they enter those folks, and they end up being the online presence for them, which right now, as you said, Avneet, is a beautiful opportunity for them, right? And moving forward for at least another year. And then obviously you said it, you gain the attraction of quite a few people that jump on board, and you can scale quickly. Now, another reason it's going to scale is tax revenues are falling across the gamut here, across the states right now because of incomes, property taxes. There's just going to be a host of issues. So they're going to now push for this to happen, and so they can start collecting tax revenues off it. So it's going to happen quickly. I think it's going to happen. It's going to kind of quote unquote blow up quicker here than it did in maybe the UK, just because out of necessity. So we're going to allow it to proliferate and allow lax of some rules, and then what they can do is lawmakers can regulate it and then tax it, because they need the revenues, because things are just falling off. So that's going to be huge for America. Now, I think New Jersey and Pennsylvania, I think there's 6 to 12 states that already have it, where they allow fantasy sports and all that kind of gambling. And New Jersey and Pennsylvania, I think, are at the forefront, which is amazing. Yeah, and someone I think is Masood. Do you know? Is that true? Okay, yeah. It seems like we're at the forefront here in the East Coast, like New Jersey, Pennsylvania. New York isn't as large yet, and it's just going to blossom from here. And what you're going to find is the reason FanDuel wanted to acquire the European group wanted to acquire FanDuel, which is the American group, because they wanted access to these markets, and they're already getting those relationships in play there. And I think some of the best plays in this space will be the companies that can offer the online gambling, and then you can they're tabbing in lottery picks into the whole ecosystem, and then offer content. So it's customization and personalization. So you feel like, hey, I got into DraftKings, Atul, you know, it's not even your opinion that Michael Jordan's the greatest, he just is. So it's just, I'm sorry for you LeBron fans, but if he gets in, and then they'll customize information for me. Now, Michael Jordan is an advisor to DraftKings, as are a lot of team founders. So I think it's going to be a huge market. And there are other ancillary groups too. Some people just own the back end, the data, and they're going to have a huge opportunity as well. So all they need is these folks to get involved in each of the states, and they can kind of go from there. So one important thing, and I'll give it back to you. And I told you up front, I'm verbose and I talk fast, so slow me down and shut me down if you need to. But I get excited about this stuff. But 1/3 of the bets that are placed on these things are before the game, and 2/3 of them happen after the game has started. So there's just huge opportunities for different ancillary services plugged into the entire ecosystem. So it's going to be exciting.
I'm curious to see how they're going to utilize that gambling data moving forward, because they're going to come in with a treasure chest with that. Yeah,
I completely agree. And you saw like earlier this year, so now when like we have basketball, baseball, NHL running at the same time for the first time in a long time, all the playoffs, there's just tremendous amount of activity happening here. So there's, it was great. It was phenomenal. And then Tencent doubled down. So the Chinese company, they doubled down. I think they offered 100 million. They're deploying 100 million towards some huge, I think it's VSPN, which is they offer services there as well. And it's to kind of take over the Asian market, just kind of keep proliferating that Asian market. And so it's going to be massive.
Mm-hmm. Samantha Carpino, she actually asked a really interesting question about blockchain and esport, but I actually think we're going to circle back to that question a little bit later. So we're going to hold on to that, Samantha. Okay. Michaila, you're next.
Yeah, so what kicked off this initial conversation about DraftKings was the pandemic world. So I think another tech company that has really seen a huge boom is Zoom,
Oh
because
yeah.
universities are using it. People are using it for happy hours to socialize. So how do you think that that's going to change ultimately the consumer behavior towards just social media platforms in general? And do you think that this is kind of going to be a new normal where, you're checking in on Zoom like you're checking in on Instagram or Facebook?
So raise a hands, a show of hands. How many people are more productive right now doing things through Zoom? I'm just curious. Wow, not that many hands. Okay, one, two, kind of. All right, not the, okay, all right. So I like it. So let's tie in a few things here. Zoom, I think, is going to be, so they're just launching another thing called, I think it's on Zoom, where they can do live streaming of events. So now you can, like this thing we did to, what do you call it? Eventbrite, right? And then if you wanted to charge people for something like this, you have to go to the Paleoton, what is that other group? Pantheon or something like that. If artists or magicians or chefs want to charge for an event, they have to combine all these different platforms. Whereas on Zoom, just to kind of tie up the Zoom thing, they're offering now live streaming where you can, with PayPal as a backend, start charging for events. So if I was a cooler guy, we could probably charge for this, and then and then you could do that all on Zoom, and it would be an amazing play, right? So I think on Zoom, I don't know if the valuation is where it should be from the stock market perspective. I think it's a bit overvalued, as is Netflix, I think. But hey, that's independent of the true value of a company. We're all having Zoom fatigue, attending conferences. You attend these things, especially in the VC space, we attend meetings because we want to build relationships. So then if we can help some small company become a large company and offer value to billions or millions or thousands, hundreds of thousands, that's the best scenario for us. So we're doing a lot of this. Great thing, it's cut down on our commute time to do meetings and everything this way. For you all, I feel for you, because part of the whole MBA or scholastic academic experience is being with your peers and hanging out with them and building those relationships, because trust me, you're going to rely on these relationships for 10, 20 years to come. And Professor as well, Professor Mierzejewska. So, you're going to want to be someone who provides value and hopefully receives value from these things moving forward. Zoom is, so Microsoft Teams is there, Google Meets is there. I can see them kind of winning this eventually, maybe acquiring Zoom. Zoom is too highly valued right now to acquire, so it'll need them to, what they're trying to do is they know that, hey, they've hit a point where this is what we're offering. Google and Microsoft are coming in offering something similar, plus they have all the other assets too, right? They can manage a lot of your data on the back end, other office tools that those both offers, they both offer. Zoom doesn't have that, but so Zoom is now offering different things so they can become an attractive, I think, eventually an acquisition target for somebody. So basically they'll keep adding assets, kind of like what Spotify is doing, keep adding assets to make them an undeniable force. Even when their valuation falls off, that comes to more of an attractive price point, someone will gobble them up and acquire them and bring them under their umbrella to then scale and be a phenomenal service for many more. So I'd see Zoom sticking around in that capacity. But right now you'll see them offering different tools. So if you do the live streaming thing through there, it's going to be an amazing play because it's free right now. They're not taking, if you charge $10 per ticket, you get to keep $10 per ticket until the end of the year. And then after that, they're probably going to start taking a percentage of fees.
That's really interesting. I actually hadn't heard about the live streaming through Zoom yet, but do you think that that's actually a viable option for them with Amazon's Twitch?
No. So I think it's going to be, it's another value add. Again, like I was saying, I think they see the writing on the wall that all these other companies are just they're much more massive than them. I can't remember the Zoom valuation in the market right now, but it's absurd. It's much higher than a company that's been around doing things that of value for quite some time. I knew this because I just talked about it on the podcast the other day, but it's an absurd valuation. We can look it up, but no, I don't think they belong. I think they're going to get acquired by somebody, or Google Meets, and Facebook probably will start offering these things. Google Meets is already kind of trying to get into the space, and there's other different things there's quite a few competitors who are well stacked and well backed that I think can win this moving forward.
do have a quick question about that. Do you
Yeah,
think Zoom is going to be too large to be acquired if they keep
right.
growing in the way that they're growing?
So right now, yeah, I think I see it as overvalued. So whenever you come in to acquire a company, you have to do at least a 15, 20, 30% premium on top of what they are. So they're already overvalued. Right now, they're not attractive. Similar to Peloton, right? Or uh, uh, so you're going to need these valuations to come down. So the sweet spot will be a Microsoft or a Google or some of these types of companies. It's an ancillary complementary component to what they're doing already, and more for the user data and more and some of the other things. What's going to happen with Zoom, because it's already a service that's being offered elsewhere, whoever acquires them, I bet you, like, they're going to fold them at some point, like Microsoft had done with Skype. I think they haven't done much with Skype, right? Microsoft. So they're too rich of a company right now to acquire. So what they have to do is just keep adding on value adds, knowing that when they fall, a larger company could come in and say, oh, I'm getting now this company that had magnitude of value add, but now it'll lower your valuation point. And that'll happen probably a year or two. Once we all go back to the office, it's going to be different. I know this question is going to come up because Michaila, you hinted to it, that our mindset has changed. We don't need to be in the office 5 days a week. We don't. We're wasting money on rent and all of this, right? On the lease and all that. So we're changing our models as well. And I know a lot of folks are. And so eventually people are going to want to be back in the office. People love that, right? Especially in your age group, will really want to be back, because that's how you meet and kind of move forward. For me, I love meeting people, but I don't mind doing this from time to time as well, just to kind of, so I can have more time with the wife and kids and other things I have to take care of, right? So I see a hybrid model moving forward. And what that is, there will be varying degrees to the hybrid model depending on which industry you're in.
Awesome. Thank you for
Sure.
that. That's just a very interesting topic. So thank you for that.
Yeah, again, I'm verbose and I talk fast, so just get in there if you need.
Of course, of course. So this is the question that we were hinting at. So blockchain and technology has been becoming increasingly disruptive over the past few years, along with JP Morgan, the central bank, also recently announced that they would be developing a blockchain technology of their own. It seems there is an increasing acceptance toward the toward this innovative way of exchanging money. With that being said, PayPal did just recently announce that its customers will be able to buy and sell Bitcoin using their PayPal accounts, which leads me to my next question and Samantha's. Um, but it's important. It's a simple but important question. As a society, are we ready for cryptocurrency? And as Samantha was hinting, have you seen the usage of blockchain on gaming or esport platforms rising, especially with digital currencies?
So phenomenal. There I think 3-4 questions packed in there. So let's strip it back to blockchain first. Is blockchain something that's going to be here for a long time? Yes. I think blockchain, once they solidify and settle on a few platforms that can work. Look, if you can have decentralized healthcare information, if I'm traveling to Italy and I need to go to the doctor and it's difficult for me to, right now in the current setup, everything's centralized, may be difficult. But if you're on a decentralized setup where information can be accessed by anyone, anywhere, that's amazing, right? So think about that. And from a safety and security concern as well. So healthcare being that way, banking being that way, down the gamut in industry, I think it's a huge play. We haven't gotten it right to the extent that every industry can move over and be efficient as they are now. It's just not there yet, but it's coming. And I think it's a huge play. Now let's get into cryptocurrency. Are we ready for it? I think some industries are and some are not. And this is my opinion. I'm open to discussion with you. It's not a space that I can be deemed an expert in, but my kind of take on it is, okay, what's ready? What online gambling is kind of ready, right? E-commerce is kind of ready. Some real estate plays they're offering the ability to purchase a property with Bitcoin. Okay, so that's a one-to-one type of thing. Now, what's not ready? So I go to Whole Foods, I'll go to whatever. I know organic milk costs $6 at Whole Foods. It costs $5.50 at Trader Joe's. All right. I know that's the price. It was that price 2 weeks ago, 3 months ago, a year ago. It will be that probably a month, 6 months from now. The the problem with pegging digital currency right now, because it's too volatile. So right now, if you is that organic milk going to cost me? What's it going to cost me? 2 Bitcoins, 6 Bitcoins, 5, 7. It's just too volatile right now. It's too flexible, too fluid, because it hasn't been standardized yet. So it hasn't come into retail and e-commerce space in that regard. But some folks are accepting it in volatile markets. Like, so that's where I see it. So I think it's not ready for that. Now, PayPal, that you mentioned an amazing point. PayPal has legitimized the practice. They're just one of a slew. JP Morgan, all these folks, as you mentioned, PayPal legitimized. And so Bitcoin, Ethereum, and a couple other folks are, I think Light is another one. They're on that platform as well. So they've legitimized digital currency as a trading option for folks. Now we can buy and sell with this. So we're on our way there. Digital currency would be phenomenal if you didn't have, I rarely use cash anymore anyway. We pay through our phones, credit cards. I rarely use cash. Does anyone use cash anymore? I can't remember the last time I used cash. All right, Harry, where have you used it? I'm just curious.
Well, my local deli, I'll use cash because they pay a fee every time they process a credit card. Pizza places, that's really it though.
Okay, so you're being nice to them because I use credit card because I get a percentage back. So I'm just greedy.
Oh, well, they make a good grilled chicken sandwich, so yeah, I'm pretty nice to them.
Okay, that's great. Okay. Does that kind of answer it? Does anyone have any take on that? Because I'm not an expert in this space, but that's where I see it. I think it's going to be here to stay. It just wants to have a couple of wrinkles they have to iron out. Slow down, not everyone at once. All right. So.
I think that's definitely very interesting, but I'm curious as to how that could possibly be implemented into more media sectors. Do you think it can, or do you see any plausible ways in which it could in the near future?
So blockchain, let's go blockchain. So on the back end, so in the music industry, we have digital rights management, which is how, so I still get checks every 3 months on music I had written for shows, because apparently there's a soap opera channel somewhere and it plays Gossip Girl, Melrose Place, and all these shows, Girlfriends and all that. Girlfriends is now on Netflix. So we get residuals from that. They manage that through this thing called DRM, digital rights management right now, which is probably a very complicated process. So they've found money for me, and I'm not even some mega star, but they found money for me that I never would have known about. B, they probably missed a few things here and there because I've done some Bollywood stuff and I know I haven't seen the money on that because those are, it is what it is. But so if they could put that on the blockchain system, which is a very seamless, secure space, look, you're hearing about it's going to happen. So, it's coming now in the media space. That would be a huge direct play. What else could they do? Payments of people, because then it could just be managed seamlessly. Because international rights. I did a lot of music for CSI New York, which plays in New Zealand of all places, and then they convert it, and there's international taxes I have to pay. Can you imagine if they put that on a blockchain seamless system? Because right now I see those checks 9 months after it aired. If they put it on this seamless system, it could be done within a month or sooner, right? People would love that. Where else could it be? Just the managing of the catalog of music. And then, so as we spoke about earlier, there's going to be the reason I want to get into this content space, there's going to be a ton of content because we all consume it, whether we want to or not. It's part of our lives now. A lot of it we're creating through social media, and then, but just to be able to manage that on the blockchain system, that'd be phenomenal. Let's go jump to another industry quickly, like the healthcare industry. You've heard of these ransom attacks that they're having. Companies come in and they basically hold their data hostage at hospitals. And then they say, if you want to get your data, they won't charge them a ton, but they'll, like what they probably could, but they charge a low amount that they will pay it, like 10 to 20, 30 millions. And that's happened, I think 3 or 4 times in the last 2 months, because they know what we're going through right now to US hospitals. Can you imagine if that was on a blockchain setup, it would be highly securitized and they wouldn't have that issue because it wouldn't be centralized, because it would be split apart. Similar industries, right? It'd just be a safer play. Can I answer that? Can I answer your question?
Absolutely. So I wanted to switch gears one more time with an example question, and then we're going to address one of the questions in the chat. So Another industry that has kind of fallen victim to the pandemic was Quibi. And so they were kind of going to be that first mobile streaming service that was higher quality content. And it was going to be longer than, the content you see on TikTok and kind of that middle ground of YouTube. So they announced that they were going to be shutting down after just 6 months. And they had raised $2 billion with the funding from their CEO and CFO. So what happened there? It seemed like they had the funds. What do you
Sure.
take on that?
Show of hands, did anyone use Quibi? Okay, one. Okay, I'm seeing a lot of notes. Okay, so 2 of us, including myself. Okay, so I downloaded the free 3-month trial. I didn't even use it until the 3rd month. I said, let's give it a shot. And so let's get back to what happened. So Jeffrey Katzenberg is a storytelling genius, decades old career, phenomenal storyteller. Meg Whitman, phenomenal tech CEO, right? And a lot of top companies. Them together made perfect sense. I think what happened with them, and this is all hindsight, so it's easy for us to throw stones at it, right? I see that it could have worked, maybe. I think the execution and the technology kind of held them back for a quick adoption. So let me dig into that. They raised $2 billion. They probably should have started with 30 million or 50 million. Because the content on there, I watched one show. The show was phenomenal. It was a Lawrence Fishburne show. It was called Free Ray Sean or something like that. And it was about injustice with criminal reform and all this. And it was a well done show. So this is Lawrence Fishburne is a big star, right? The other gentleman wasn't as big as Lawrence Fishburne, but Lawrence Fishburne said that I think a couple things happened. They raised too much money because of who they were. Everyone was a part of that. Disney, Hulu, all these major companies and investors wanted to be part of this because of those two, Jeffrey Katzenberg and Meg Whitman, saying whatever they touch is gold, so let's be part of it. So I think they raised too much capital. More of that capital, and I think they put majority of it towards content. I think more of it should have been a larger sliver should have been towards the tech platform and the partnerships. And I'll delve into that, which I think led to their downfall in a sense. When you're watching it, so I would watch it on my iPhone, and I don't want to sit out here. My wife and I would watch it together, so I would stream it to our Apple TV. I guess they didn't have that option until 2 months ago, and I got into it like the last month. So then by the time I finally started using it, they had that option, but it didn't have that Netflix user interface. It was a terrible user interface. After each 7-8 minute show, I had to go back to my phone, scroll down and hit the next episode and stream it again. So it didn't have the automatic, let me go to the next show. So the user experience wasn't great, right? And so I think if they would have just have worked those kinks out and just make it like Netflix, everyone's expecting Netflix, especially if you're giving me something 7-8 minutes. Now, I think that could have been, so get the partnerships in place, which they didn't have, to then get that tech and then get that tech platform to keep that going. If they had raised less money, that might have been easier to say. Now, the flip side that happened, I think there's 2 things. I think maybe their brand partnerships forced them to kind of launch in the pandemic, or if they were sitting on this cash, they could have waited until and wrote it out. But that would have probably been another year, as we all know. They were waiting, as you all know. When we're in line at Starbucks or deli, as the gentleman mentioned earlier, let's flip on a show while I'm waiting for 7-8 minutes. But you know what? Usually people that the audience they're going after, which is millennial and Gen Z, they're going to go to social media in that time frame, maybe TikTok or Instagram or whatever, versus watching a show, apparently. So that's one miss for them, I think, because their competitors are something they're already used to and they're having fun with and enjoying. And that was content they were creating. I think it was just too easy for them to raise too much capital too quickly, and they didn't deploy it in a proper manner. Todd might know an answer to this. Todd, do you want to kind of jump in here and help the group here? Is to a quick take on it, if you're interested.
Sure. It's you and I share a lot of the same kind of concerns of what happened with Quibi. I agree with you. They should have waited through the pandemic, but I think you have to add in there the fact that they were creating an entirely new distribution platform, like an OTT platform, to compete with other existing well-established OTT type platforms. And just like, you can't have 20 car manufacturers. You're not really going to be able to have people able to manage dealing with 20 OTT services. All the research that I've seen, and I pay a lot of attention to this, is that people have a cap around 4 or 5. And if they're not going to go over that, and especially during recessionary period, people are going to make very deliberate choices into what content they're going to buy and who they're going to get it from. And so what they're going to do is they're going to look at where that best value is for the type of content that they want. And if there's something that they can kind of kick off to the side or just do without, that's what they're going to do. I think one of the, part of the genius behind Netflix and to a lesser extent Amazon Prime and I think Disney and certainly Peacock and the other ones that have popped up are hoping to pay attention to this, or take advantage of it, is that they know how important product loyalty is to the consumer. It just, if something's easy and I can get what I want to watch on Netflix on my phone, why am I going to go someplace else? I mean, it's just, especially if I'm going to have to pay for it. I don't know anybody who paid for the Quibi subscription after the trial. I sure didn't.
I'll throw two other nuggets in there. Todd, I agree with you. No one paid for it. Not that I know. So there's two things. So there is some money that they'll be able to capture on this. Okay, so there's a couple of brilliant things that Katzenberg had done. First thing, another downfall to add to what Todd was saying and what we were saying earlier, if they're going after the Gen Z and millennials, they don't care to watch, like Liam Hemsworth or Reese Witherspoon, who are the stars, and Lawrence Fishburne, who are the stars of their shows. They kind of want to see Charlie D'Amelio or whatever on TikTok, the TikTok store. And if she is getting her blood drawn and she faints, that's what that audience wants to see, right? And versus seeing these other well drawn out, well expensive shows. That's one thing. B, the brilliant thing that Katzenberg had done, and this is all him because he's just a brilliant man. So they have $350 million still on the books of the $2 billion. They're going to then take care of their employees as they get laid off and maybe pay back some debtors, right? That's one thing. He also has licensing rights to all the content they created for the next 7 years. I can see them looping it all together and selling it. So they could probably, in the next 6 to 7 years, 5 years, recoup probably 300 to 500 million potentially. And if you can get that and get some advertising and all that in there, so that could be, they get close to $1 billion. So it's $1 billion wash, $1.2 billion wash, let's say. Not great, obviously, but not bad, right? And they'll recoup some of the cash back. That's what happened, in my opinion, to that story.
I think that's really interesting, especially the point where you said that they raised too much money, because on the opposite spectrum, you have Pluto TV that was ad-based streaming startup, and they only had 500,000 in initial funds. But they ended up with 12 million users and getting bought for 350 million. So kind of the exact opposite in that case.
They just properly scaled. They scaled at the right timing, right path, at the right clip, the right momentum, right? So everything worked there. 340 million, I think, was the exit. I think Viacom acquired them. So my friends worked on that deal, and they couldn't share too many details, but they said this was a perfect play for them to kind of enter that streaming space. Now, Viacom CBS is not working well as far as providing value back to the shareholders. Don't know why. And I think they're going to start siphoning off, like BET will be sold, Comedy Central will be sold. I think they're going to start siphoning that off, but they're in for a world of hurt as well. I think that's coming. So sorry, because a lot of you are in media, so there's going to be some interesting things that happen in this space, but there's going to be phenomenal opportunity that arise from it as they kind of learn to deliver to the next generation, and what we're all seeking now.
So really interesting. It seems like they were trying to make Hollywood go, the silver screen actresses and the theater screen actresses into like phone screen actresses. Like that transition didn't quite happen the way that they hoped, which is very interesting.
Right.
So moving on to our next question. After discussing these businesses, what would you say are the digital business models that are working best in the sports and media space at this moment, or you expect to work well in the future? Because again, we are placing bets here. And what is their secret to maintaining longevity in an otherwise fast-paced business where would-be unicorns fall as quickly as they take off, quite like Quibi and WeWork's very interesting ascent and decline?
Great question. So I think, so the few spaces, let's say in media, entertainment, sports space, the ones that are going to take off, I think that whole DraftKings FanDuel place that whole sports gambling on top of live events, that's the one play that everyone loves. Live events, live sporting events, people love it, right? It's still the draw. And it's the reason why a lot of all these media companies were hurting for a while, because the summer was difficult. And I mean, at one point, I remember it was some Russian ping pong champion between some teenage high school group they were showing on ESPN back in April or something, because people were seeking anything to watch competitive. They want that nature, right? So I think that's going to be a huge play. Esports is going to be huge. What else could we say? I think the content aggregation play, we're working with some folks, some celebrities, to develop programs that we can, but like low cost programs, which are more like a David Letterman setup, where it's an interview type of thing, and then to license to those folks. I think there's tremendous appetite for content moving forward. And actually, Todd's company is going to be something phenomenal as well. I think there's a huge opportunity for it as far as providing news to these streaming services. I don't know, Todd, if I should have mentioned that. Sorry. Give me a yes or no if I should have. That was okay. Just a thumbs up, thumbs down. But so I think
it's moot now.
sorry. But I think there's huge opportunity in that space. Education will be huge as well, right? We're all figuring out different ways to have online education. So, and these all come into the media space, because all being delivered via media platforms, right? So if you're interested in this space, become an expert in one of these spaces, because even if you get into a large corporate conglomerate, they're going to want you to think entrepreneurially, because you have to be nimble. Because the problem that they all had is they didn't move quick enough. The music industry was the first to fall. Movie industry is going through something difficult right now. It's a different, and now because where there's been innovation in at-home viewing experiences, right? But our AMC theaters are still the same AMC theaters they were 20 years ago. They haven't innovated in that space. So I think there's going to be tremendous opportunity there. A lot of these folks are going to close. A lot of these companies are closing. We already know that they're closing down. And I know someone that works at National Amusements, which works the AMCs and all that. So he's at the private equity group, and they wanted to convert that to esports, a lot of them, but they shut down. Even the one right by me, they're going to put a residential building. They already tore it down. So they're seeing better ROIs in different spaces, because they didn't innovate to keep up with the at-home viewing experience. And now we're all used to it. We're all itching to get out into the world when we can, and that will happen again. But we're becoming accustomed to doing a lot more here. So there's plays there. There's plays in social media, I think. What was your question? So I'm answering your question, right? Somewhat. I'm getting there. What are the plays in media? Is that what you're asking?
Yeah, I guess we can kind of frame it in a way. Where would you place your bets on what type of business models? Where are we most likely to see a successful investment or business model? Yeah.
The best models are, so the kind of models that everyone likes to see is there's a perfect business model would be a high upfront cost, let's say, and a recurring revenue stream. What do I mean by that? So if you can find the media equivalent to Peloton, you pay $2,500 for the bike, and then another $40, $50 every month. So if it's $40 a month, $4,800, you're almost paying what, $7,500 a year, the first year, and then it's another $5K, let's say, for every year you have it, because of the recurring revenue stream. Wherever you can get a recurring revenue stream, offer a service that provides a recurring revenue stream, phenomenal play. Because from an investor standpoint, we want to see that. Say, not only do you get them to be a part of your product, you can get eyeballs, but then there's a reason for them to stick in. Now, the best thing, like I think Peloton's overvalued. I'm gonna just put that out there. But the phenomenal thing they've done is if you buy a $2,500 bike, you're not gonna just let it sit there. You're going to hopefully continue that stream service. I think Mirror is interesting. Mirror is a similar company that Lululemon acquired them for 500 million. And there's going to be a media play through there. I think Mirror right now, they offer a lot of, training through it. I think Lululemon is going to now place them in their stores once we get back to normal-ish. And they're going to offer yoga. And then you're trying on something in the fitting room, you get advertising fed to you or other products. So they can sell you other ancillary services. They're going to really delve into the media. So I think if you want to create content that makes sense to be part of these different ecosystems, there's a huge play. If you can figure out a way to monetize fitness, even if you're into that, we're headed that way. Because look, man, I picked up we picked up some 5-10 pounds probably like during this whole thing, and now we're getting it cleaned up a little bit. People want to be healthy, and we know we're not being as healthy as we were before. And cleaning up a little bit, but we're not traveling as much and all that. So I think that's going to be a huge play. Health tech, we talk health tech, fintech, esports, all of this stuff. Actually, everything we spoke about today, they're huge opportunities if you can find your right niche. Don't go Quibi on it. Go in at the right level with the right cap, and do your cap tables and everything, and then you can proliferate, I think. If that answers it, kind of.
Definitely answer the question. I think Ella has a few burning questions of her own right now. Yes.
Okay. Yeah, and throw them at me. I mean, and let's talk through them together, because I'm not going to have all the answers. I definitely don't have all the answers, but I'm sure somebody here will. Some of you all will.
I think at this point in the night, we're going to open the chat questions. So I feel like you've touched on a few of them, definitely in the genres that you think have gotten most popular during the pandemic. But in terms of predictions for categories or genres specifically in esports, do you think they'll develop faster than others? And what top three esport categories in 2 to 3 years?
Wow. Okay. You're asking the top three. So let's take esports, draw it out, and what are the main 3 areas in that we're going to have robust growth? Is that what you're asking? I think there's a company we're looking at right now, and I think they're phenomenal. People are excited about them. Funds are really excited about them because they've done something that they're just, in my opinion, and I've mentioned this to them offline, they're somewhat replicating something that already happened in Europe. And we can point to them and see what makes sense to do here. So what they're doing is they're offering the online gambling experience, the online betting, sports, fantasy, all of that, but with that content curation piece. And I know we've talked about that. We talked about that up front. That's huge, because then it can be customized a bit, and you can feel like this is a piece of, this is me, it's catered to me. And wherever you can get that kind of piece, and then maybe offer them a recurring revenue and then get a transaction fee, crazy good model. So that's one space. Throw some out at me and I'll tell you yes, we'll talk through them together.
How do you think, that kind of back to the Quibi question, because there was so much hype behind Quibi and that business model kind of bringing quality content to a really small screen. Do you think that there's a little bit of a cognitive dissonance that's going to prevent certain things from happening because we kind of are used to certain things and want things to be a certain way, and we're not going to make certain transitions as smoothly as people hoped?
Look, I think that Quibi, let's just look at that one. I think it's a phenomenal way to tell a story. It just didn't work right now for whatever reason. We're all making assumptions, don't know what really kept it from working. I did enjoy the experience. If they could have just figured out that Netflix algorithm where it just automatically goes to the next episode, so I don't have to keep going back to my phone, done deal. That would have been kind of cool, because I heard there were some other great content piece. I heard there's a Kevin Hart piece on there or something, and it was great. So that way of telling stories, I think, could be interesting. I think so. I don't know this gentleman directly, but he actually, and I don't know much about this D'Amelio family, but my buddies on a group chat were chatting about this guy left a huge role to now be their personal manager, because I think he's kind of assuming they're going to be the next Kardashians in a sense. So he's going to be their manager for because the entire family wants to be a big deal. And so, and then I don't follow them because they're too young and that's illegal, but but they're dancing on TikTok all of that. And so, and they've gained this tremendous following. Regardless what happens at TikTok, they're trying to, plug them into other spaces. So I can see them, let's not just do these 10, 15 second videos, 30-second videos. Let's blow that into a 7-8 minute piece, feed it with advertising or integrated marketing. There's a huge play there. So I think the Quibi thing that we're coming back to that. I think that actually it could work. The model could work. It just didn't right now. And somebody's going to figure it out. And it could be Katzenberg or, some of the folks from Pluto, or Vessel was another one. Verizon had something at one time. It could be some of these folks working in conjunction or someone completely different. I think that model is going to work eventually because we have an appetite for that.
Thank you for that.
A few more questions are coming in through the chat, so feel free to also jump in if you want to further explain. But this year, and I would say arguably last few years, fake news has had an enormous impact on our lives. What's your take on misinformation in social media? Some say monetizing social media platforms would be a way to fight it, but in emerging markets, Facebook groups or market features add a lot of economic value. Are there any startups that focus on misinformation on the web?
So yes, there are. There are some that go and clean it up. I think it's only going to get worse. I think unfortunately, I think so fake news. So why does it work, right? So we want engagement. Let's just look at that. We want engagement. So I think there's already some metrics out there, and this goes back to, annoyingly, I'm going to go really, really far back, caveman time. You touched fire, you burned yourself. Okay, you didn't do it again, and then you spread that information around. You put your hand in water, it didn't impact you as much, so you're not going to, share that as quickly as you would. So we share negative information quicker. And we spread that at 10x the rate of sharing positive information. That's just a human ingrained thing dating back to that time. Okay, that works perfectly for social media. So we saw how it can manipulate, there's certain things that have happened globally without getting into politics of it, but certain things that have happened globally that have been influenced by a lot of fake news. Now, there have been pictures, I think I saw something of, so let's just say some celebrity, you see them and they're in a compromising position, like, oh, they're like smoking something or doing something like with drugs or something, but it really wasn't them. But the AI and what they've done, able to Photoshop and do whatever they can do, people, and it resonated. We saw the whole thing with the Pizzagate with Hillary Clinton or something, everyone thought she was doing, and it traveled because people wanted to engage with it and they want to spread negative information. And because it's exciting to spread something like that. Oh, I'm one of the few to know about this, and let me spread it to many. And they keep liking it. Things like Facebook are pretty. I don't think they're healthy for us. I don't think a lot of these things are healthy for us. They're very useful tools in many regards. I'm not knocking that, but they're very unhealthy because we're not trained to use these things properly, right? We just weren't, and it's us creating the content. Facebook is a publisher, and they have the most content that they've never created. It's all been created by people like us, right? So I think it's going to get worse because the platforms are there to do it, and it's more exciting for some folks to create that kind of content and get some engagement, and then you can sell ads towards it and all of that. So I think it's going to get worse. You saw the FANG minus the Netflix, they're all in court, right? In the last several years, and Zuckerberg, and then last week it was Google and all of them. Some of these companies will get broken up, right? So Google is ripe for it. Amazon's probably ripe for it. Amazon can launch out a second, AWS could launch out and be a top 100 company along with Amazon itself. So, which is great. I'm not giving you stock tips, but invest in Amazon. It's a great play, but figure out your right point because I don't give advice like that. But it's going to get worse, I think, for a little bit until we find a way to police it. But then that's us getting involved in regulating, and depending on, so that, different administrations want to regulate it differently, just domestically even.
It sounds like there is agreement that regulation is needed, though, which is interesting.
May I say one thing to that, though? May I say one thing? So listen, so it is needed, right? I think it'd be good. But here's the thing. So right now, countries in Asia are with the AI, and not from a negative perspective, so the phenomenal things they're doing on a positive space, like the identification through eyes and all of that, knowing our metrics and some data points around us through all the different AI and tech that they're doing. They're eating our lunch. South Korea was able to kind of nip this whole thing, coronavirus that we're experiencing in the bud, because of contact tracing and effective tools to do that. We can't do that here. We haven't done it here. So it's almost, so I'm on two sides of this. You let a Zuckerberg type of weirdo just run and create all the sick, crazy things he wants in the world, because that keeps us competitive with all the other countries in the world, because they're coming for our lunch, A. B, we need to regulate them because it's scary, right? So I don't know where I fall on that. So just think about that for yourselves moving forward, where you kind of sit on that fence.
Thank you for that. Do we have any more questions, Michaila? I think we have the Axel Ropenek, right?
Mhm.
Okay.
Did we? Oh, we have one more come in. The reality TV business model has had a fantastic run. Do you see it continuing much longer?
Sure. Why not? I think we like live things. We like live sports. We like live reality. I mean, as long as reality, it can give us what their other contract was giving us, right? We would watch other content because it would give us drama, romance, competition, whatever we wanted from it. As long as they continue to do that, and they, so just a little nugget. And many of you are interning or have worked in media companies. A lot of these reality shows are scripted. I don't know if you know that. So Shark Tank is, because I do a lot of things that are similar to Shark Tank, and I know some friends on it that have been judges on it. It's a scripted show to an extent. So, they make you seem either very brilliant or very not so brilliant, or an owner of a space or a vertical. So they somewhat script it, and they film something 30, 40 times, and they get the right 2 or 3 to put on the 10-minute segment that you have screen time. So yeah, I see the space. And then TikTok is reality TV. Instagram is somewhat reality content as well. Facebook is as well. And then if you can blow that out and then get to that Quibi model of making it 6 to 5, 6, 7, 8 minutes of it, I absolutely see an opportunity.
I think that's very interesting. And I think we can start to wrap up the discussion. Do you maybe want to just give us maybe some lasting advice for young professionals starting out, and maybe any recommendations for publications to stay up to date on current news?
So I think you should check out our podcast, Whiskey Hugh. Just kidding. We talk about a lot of, so we're 3 folks on there. We talk about business, tech, and venture, and just big companies to small companies. So we talk about all that. That's one place. Bloomberg is great. I think I'm a big podcast guy. I'm one of those rare people. I think most of the world, if they read something, they absorb it better. If I listen to something, I absorb it better. 2 weeks from now, I'll still remember it, versus reading, I'll forget it within a couple days. So if you're that person, podcasts are great. Bloomberg is great. If you want, I think you should get as much of a business sense around topics, regardless of the industry or topic, just to get the business sense of it, because then you can be successful in that space. My favorite class is there. I don't remember the professor was name. I remember she had dark brown hair, but negotiations, because I use that daily, from business to my kids. I mean, I use it, right? So negotiation was my absolute most impactful class I had there, right? And then obviously the finance, all that. So that's, I would, kind of delve deep into that. So know what you don't know and get really good at that too. That would be a huge thing, I would say. What else are you asking for? Give me, that's the best thing I've got right now for these. Know what you don't know what you know, and kind of double down. Any other things that you think? Anyone, you probably have better, you're more in tune with this than I am, most of you.
How do you think a fellow RAM student that's in the job market can make themselves look hyper competitive, especially during an interesting economic time like this?
Okay, so I'm going to say something that Professor Mierzejewska may not like. So I'm thinking, there was an opportunity here. If you can't meet in person, which is a big part of any of these programs, take a year off. Let's say, okay, it's gonna be horrible. Don't throw something in. So it's great to do this so you can keep on track with what you're trying to do, because then you can come out and then obviously you have the world at your feet. Phenomenal play. Another play. So I used to think that was the right only path, and I'm seeing there are alternative paths as well. So let's say Peter Thiel, everyone knows of him. He offered the Thiel. So you can maybe not agree with him politically, whatever. He's a phenomenal businessman, slightly odd, but he has the Thiel Fellowship, right? Which I think he started like 10 years ago, where he gives someone under a certain age, I think $100K to drop out of school. And you can probably go back to school eventually, but he'll give him $100K. You train with him for 2 years to run businesses, and it's more selective to get into than Harvard or even Stanford type of things. But it's a great program. But you learn how to launch businesses in any economy, right? So those are great opportunities. So I was having this conversation with one of our friends. We were talking them through like MBA options right now. What if or even undergrad, let's say you don't spend that 50K. What if you got 10 people not to spend 50K this semester? You have 500K, let's invest in something together. This is horrible. All the professors on here are going to throw something at me. Stay in school, kids. But, if there is another option, there are other options. If you feel like there's a solid play for you, that's another option as well, right? But I would try to get some well-versed, because I think also finance, marketing, all these courses you'll be taking, great. That'll set you apart. But get the one like the negotiations will really set you apart. You'll need that. Get better marketing branding than I ever did, because I don't have it. Todd. Tim, my business partner, has it really well. So he's Tom. Sorry, what's wrong with me? Tom. I'm seeing Todd's name here. I'm saying it's Tom. Sorry, Todd. So Tom, my business partner, has it. He's phenomenal at marketing and branding. So we've always passed it on to him. Just get good at things you think will be, where the market's heading, stay abreast of where the market's heading, and just kind of keep delving into it. Like we talked about a lot of the hot markets, fintech, esports, health tech is going to be huge. Delve deep into what you could do, where these models need to pivot. Don't just kind of jump into, this is where it is now, this is what I can offer it. Kind of jump in, look 3 to 5 years ahead and say, this is where it's going to be. How can I help get them there? Be an entrepreneur in an entrepreneur setting type of thing. Best case.
PEVC Club loves that answer. So sorry.
Okay, good. Good.
We love our fellow RAM entrepreneurs. So Utkarsh Bansali, how are you doing? He actually asked this last question. So he says, I guess this question goes more to me. I guess that means more toward the PEVC realm and Atul. But can you give some insights on, are you seeing more startups asking for funding, focusing on first-party ad solutions? And secondly, are you noticing ad tech companies are popping up focusing on edge computing and its implications on first-party targeting solutions? So this is very much a media tech question.
Yeah,
great question.
I was hoping, Avneet, you would answer that.
To be honest, this is not my realm. I'm more biotech. So I think this is all yours.
I'm not really ad tech either, but yeah, there are options there. So here's the thing. If you're asking about, are there companies being launched? Remember up top I said, so yes, I don't see a lot of ad tech companies come that way. That's not our focus area. If I see them, I'll usually pass them on to my friends, because it's a very small VC group here in the New York area. So we just kind of pass ideas back and forth. If something's not relevant to us or we can't bring value to it, we're happy to share it. Similar to what we're doing now, I do this weekly with 8 other folks. We just pass, it's just a VC investor group meeting. We just pass ideas. What are you looking at? What were you sent today? What makes sense for you? We just kind of pass ideas like that. And so we can help people maximize ROI and stuff. So just to answer that point, yeah. Ad tech's a space that's going to kind of, I think, so since capital is so cheap, I think there's going to be a tremendous amount of mergers and acquisitions that continue to play out for the foreseeable future. And regardless of what happens tomorrow, probably Friday or Saturday, probably get drawn out, I do see capital remaining cheap for at least 2 years. I think the Fed, Powell has already come out and said that, right? So capital's been cheap. There's so many ideas happening right now because capital is cheap. So remember I said up top that, in a recession, typically companies start to wane off because capital dries up and all of this. capital is so cheap right now that there's so much money in an abundance. You've heard of these things called SPACs, special purpose acquisition companies. So they're good and bad, right? So the great thing about them is they're efficient, they're cheaper to launch a company, to get a company to IPO, to get it into the public arena. But you have to be around the $1 billion mark evaluation to kind of be considered for that. And that's the great thing about them. So then, but the bad thing about them, imagine if a WeWork had gone through a SPAC. So we would have had this crap company, right? It's a great company at a $5 billion valuation, not so great at a $45 billion valuation, right? So if it had gone just to, if it in a SPAC setting, you appeal to one or two teams, they like your idea, flood you into the public market, and we're all trading your stock like you're a godsend, right? At $45 billion valuation. Right now, you're seeing so many. I follow this guy named Jumit Palihapitiya. He's a Sri Lankan guy, actually. And he made his initial money at Facebook, and he is a billionaire now. He wants, it's a game to him because he's so rich. So he wants to basically launch a SPAC for every letter of the alphabet. So 26 different SPACs. And he's just launching, some of these are going to be crappy companies that are going to hit the public markets. And then 18 months from now, not just him, but all of these companies that are hitting the markets, 18 months from now, we're going to see the true value of these companies. So just imagine if like we had 20 WeWorks hit the market, we're going to realize 5 of those are really bad, in a little bit. So I think we're going to realize 25 to 30, 40% of these companies that are going to hit the public markets, 18, 20 months from now, we're going to realize, wow, they shouldn't be here. So you're going to have somewhat of some high volatility. Let's call it that. I'm not going to go as far as say the C crash word, but you're going to have some tremendous volatility. Is it Utkarsh, I couldn't answer your ad tech question. It's not my space really, but capital is very cheap right now. So you're going to see a lot of bad ideas get funded. So, good and bad ideas.
There have been a lot of SPAC funds popping up, like Bill Ackman's. So we're
the largest one ever, 4 billion, right? Yeah. So, and good for him. And I think someone like him, he's brilliant. I know he's had his things with Carl Icahn. He's very controversial, sharp guy though, right? And I don't know if his, Pershing Squares, his hedge fund, I don't know if it's named after the coffee shop that everyone goes to, because I frequent it weekly, usually during normal times. But, the one right across from Grand Central. So, he's going to I think he'll do something interesting because everyone's watching it, right? But these are all speculation, right? They're all spec plays.
All right. Any more questions, guys? Nope. All right. So I'll hand it off to Michaila to wrap it up, and Professor Bezina.
Thank you so much for being our guest tonight. I think we can all walk out of here learning a lot. And I'll hand it over to Bojana.
Well, thank you. There, I see some claps. So before, even if you don't unmute yourself, please give an applause to our speaker. I think there were so many words going through. Yes, you speak fast, Atul, but one part is so many specialized words. So first of all, I've learned myself a lot. And one part is, I wouldn't agree with you, Atul, what to do when the COVID hit about going to school. Because, one thing it is, if you would put together $50,000 with 10 kids together, if you lose everything, there's nothing left. If you invested, there's always something. If you went to school, there's always something left. So I still believe in investment in yourself, but we can have this conversation longer. But in terms of media, and I think many of you have learned lots of stuff, and because you joined Media Management and PEVC Club, I want to do a little plug in. And in about an hour, you receive also a thank you note with inviting you to our next events. We have them every 2 weeks on Monday. And our next one's going to be about how to network in times of COVID. So it will be about how do you develop networking skills in times of COVID. With that, also, I want to invite you to explore not only finance classes, but also negotiation class, by the way. Yes, it's offered in all communication schools, communication classes offered in Gabelli. So do take media or communication classes. And I really look forward to see you again in one of those events. I give a last word to Avneet. The event was recorded And at some point later, it's gonna be shared with those who've been participated and also on the YouTube that Avneet and the club is running. So with that, thank you once again, Atul. Thank you for all the speakers and all the great questions. And yeah, now we can unmute actually and do one final clap to everyone.
And if anyone wants to reach out, just LinkedIn is an easy way to reach out to me. I'm happy to just chat, whatever you want to do. You can do a Zoom call, whatever you like. If there's any way I can help you all, happy to do so. I might ask you for help as well. So, you know, keep it two-way.
So thank you so much, Atul, for giving us your time, your knowledge, and for giving us the space to learn about PEVC in a very interesting space at an interesting time with new insights that I know we'll take with us to the future.
Amen.
And Avneet, Michaila, and Professor, you've been awesome. So thank you so much.
Thank you for joining again. And we stay in touch.
Yeah, absolutely. Enjoy your evening.
You too. Enjoy.
Thanks so much. I really appreciate it. It was really cool.